capital too small. In trading, more money beside trade.
So what's the minimum amount?
$100.
Oh, of course, they afford. 1,000 there.
But be reasonable. If you want to trade $100, then you must make sure your P&L, your take profit and your stop loss is only $1 per trade. So which means that for $100, you're able to lose 100 times. If every time your loss is only $1. Make sense, huh? Yeah, correct. Yeah. But then the issue on the second clause that I said, capital too small is okay, but your lot size too big. Because if your capital is only $100, it's very small, but your lot size very small also is okay. Lot size small until your stop out loss, every trade you lost out is only $1, then you are still okay. But then your lot size is so big that every trade you lost is $10, then you only can afford 10 times losing trade. And if your lot size is 50, you only need 2 trades to wipe you out the whole account. So that means your lot size is too big, or leverage is too high. Leverage too high is the same issue with this lot size too big. Or wrong choice of trading instrument. You must know your trading pattern, your trading strategy, your system, your personal behavior. Because if you use the same style that you trade Forex to trade index, you may not make good profit. And you use the same style you buy and sell stock to trade Forex or index, you also cannot make money. So that's why the way of your system or your trading strategy or your trading system apply to certain instrument may not apply across the board to other instrument. That's why you have to know very well what kind of instrument that you are using to apply your own strategy and your system. And of course, the other important part is no proper trading journal. You fail to review it. Even you have a trading journal, you fail to review it. Even you review it, you fail to make correction. So that is the important part, that you have to have a trading journal to record your trade. And then you have to spend time to review it. And then you have to make correction, adjustment to it in order to make consistent profit. Not enough discipline or personal time constraint. You have a trading system, you did not follow your system. Okay, you suka. One day you take a stop loss 100 point. Next day you take a stop loss 1,000 point. Assuming you have 100,000 account then okay 1,000 you can afford how many times? 100 times. So, or you have no trading community with an edge. Because trading community is also quite important when you start the trading journey. Okay, so you know your peers, what is doing, you can ask them for advice, and you can know that whether if you are learning the same system, okay, whether you are doing it correctly. Then, of course, after you are so seasoned already, maybe after 10 over years, you are making profit already. You no need that kind of trading committee. Or you can start your own trading committee. You get your own followers. So, just now we mentioned wrong choice of trading instrument. There are many instruments that you can trade in the market, like stocks, bonds, Forex, cryptocurrency, commodity indexes. Can I know, show a hand, how many of you trading stocks here? Just a quick one. Bo meh? Singtel share bo meh? Sure have one. Okay, more or less all should have a stock investment. We don't call trading, but we call investment. Investment in the sense that you hold for a long, long time. How many of you still hold your Singtel share since the government give you that time till now? Wow. So you still have both? Wow. Very good long-term investor.
It never reached the 360.
Can make money one. Like that can make money one. Bonds, how many are bonds trader here? Bonds are fixed income, like fixed D. Or Forex trader. Okay, how many are Forex trader here? Boom, eh? You know, be a Forex trader? You know what is Forex trading about? You buy, sell currency, like you trade euro, you trade sterling pound, you trade Aussie dollars, New Zealand dollar. Don't have. You have to faithfully raise your hand, let me know, you know. For those who are in the webinar, can you type in your chat box what instrument you're trading? So I know what to cover properly. Cryptocurrency, Bitcoin, Ethereum. Oh, very troublesome. Very easy to make money also. Now have a new coin. Other than the dog coin, now got the Triumph coin. You know, Trump prime president. Any coin also can come out in the market. Commodities like crude oils, gold, coffee, banana, copper. Okay, indices. Okay, so I myself I prefer indices like I mentioned before. So I will just cover indices for tonight. Okay, so what is stock index? Stock index are basically a basket of stocks represent the value of a group of stock listed on a particular exchange. Tracks the performance of the group of stock that represent a particular market. Okay, calculated based on weighted average price of individual price. So normally larger companies, those with higher market cap have a greater influence on the index. So buy and sell index is simple and easier. To me, that's my own personal opinion. Versus you buy and sell a basket of stock. So example, like you want to buy S&P 500 versus you buy 500 individual stock. So you buy one S&P 500 is easier, right? Because you only need to buy one index, which is called S&P 500. But then it includes 500 stock in the US exchange. So it's much more easier. Or even like SIMSKI, Singapore Index. So you buy one SIMSKI versus you buy 30 Singapore stock. So that's why, to me, I think buy and sell one particular index is much more simple than you buy and sell one basket of stock. So no need to spend time on individual stock analysis, because if you want to buy 30 stock, you also won't have so much capital. You probably pick, go and analyze, choose maybe 10 out of the 30 or 10 out of the whole Singapore market. Then you still have to do stock selection. But then for index, you only need to track one particular index, either STI, okay, or either Hong Kong Hang Seng Index. So you just need to analyze one particular index that represents the market. So if you think Singapore market is going up because of the budget news, then you just buy one STI or you just buy one SIMSKI index instead. Because you also don't know which stock to pick. When you pick DBS, OCBC, or UOB, then which one? You pick all. Yeah, you have the money, is okay. But then you only have $100 how? Or even you only have $10,000. So you also have to think very hard. Which are the one that you want to pick? Singapore have 500 or stock for you to choose from. And this is also cheaper commission. Okay, you trade one index. Example like SIMSKI, only $2. Okay. One way, $2. Okay, you sell another $2. But then versus you buy stock, assuming one DBS, then you have to pay what, $20? Or $30. Okay. So you compare already, one stock you have to pay $20. Let's say you buy 10 stock. So one way traffic is $200 already. Versus I buy one SIMSKI, okay, it's only $2. Then which is cheaper? The commission wise to get in and out is much more cheaper. Also, one particular important on the index is to hedge against market downtrend. Okay, if you have a large stock portfolio, so let's say you are holding 20 stocks, but then you are a long-term investor. So, or even you are a short-term trader, when your market you know is coming down very severely, you have a market crash. But then you want to sell 20 stock, it take a long time, to liquidate 20 stock. And you also feel the pinch. This one I want to hold long term, this one I want to hold short term. You also start analyzing which one to liquidate. So if you know how to sell, short sell index, you just sell the index. Okay, if you have 10 stock, you just sell 10 index. Okay, 10 lots of index. Then you are quite safe to take the downtrend until the market yield turn up. So you no need to worry about you have a negative position in your trading account. So far, no stock exchange index have collapsed to zero value. You ever see Hang Seng drop down to zero or not? You ever see S&P become zero or not? You ever see Dow Jones become zero or not? You ever see STI become zero or not? You ever see Nikkei become zero or not? No stock exchange index can collapse to zero one. So that's why if you ask me, I say you trade index very safe. If you pick 30 stock, I cannot guarantee this 30 stock will last for a lifetime. Especially nowadays in stock market. If you didn't keep track for 1-2 years, you go and check again. This particular stock disappear already. Either become bankrupt or become merger or become taken over or become a share split and all that. So if you didn't pay attention, it will become disappear one, or eaten out by another company. So it's quite easily for any stock becomes bankrupt or become takeover target. And over leverage margin trading is the major cause of failure actually. So why I like stock index? So that is the reason. It's very predictable. I can tell you stock index are very predictable one. Because you have an opening time and closing time. It's like working hour. You go office, you start office work at 9 a.m. Okay, and you end at 5 p.m. Then I trade Simski, same. You always start 8:30 a.m. In the morning. Never feel unless public holiday. Okay. Then you close at 5:15. It's a trading hour, very predictable one. So every day, if I am a Simski trader or Singapore market trader, I just sit at my desk at 8:30 a.m. Then you will start trading on. Unless it's a public holiday. So if I like Hang Seng Index, I trade Hong Kong, I will just stand by at 9:15 a.m. unless it's a public holiday. So you know what kind of instrument or what kind of timing you're trading. You just need to sit there when the market opens. So the reason for you to start trading, may I know what's the reason that you start trading? Can I have a quick one to answer? Just as some response. For dividend, that's to make profit. Then what else? Take profit is also to make profit. Okay, some more?
Q border.
What is it? Q border, yes, good. Pastime. Then some more?
Income.
Yeah, make money. I can see that majority to start trading is to make money. Okay, so mainly these are the few reasons. Some you want to gain some knowledge because you want to know how to trade this particular reason and to make some knowledge out of it. And to make money is a major reason that we want to trade. Otherwise, why spend the time on it? Time is money. Okay, so we want to spend less time, make more money. So to make money or backup plan. Okay, if you are working professional, in case 这岗位材料don't any time can get retrenched already. Look at the boss, we song now. You better have a backup plan. So trading is a very good backup plan to have a second income. Fill the boardroom. Okay, hobby pastime. Got hobby pastime one, This is a very good hobby to pass time on the computer screen. Rather than you play computer game, No income one. You spend so much time on computer game, also no income one. But you play this one properly, can make money one.
Gaming, if you are good, you can win.
No, Singapore can't. Malaysia can.
Why Malaysia can it?
Market can up and down. Singapore market never move on.
Oh, you're talking about the market that you trade. That's why just now I show it to you, ma. In index, quite easy, ma. You can trade KRSV Malaysia index. You can trade Japan index, okay? You can trade Taiwan index. You can trade China index. You can go Hong Kong index. You can go around the world within 80 minutes. So quite easy, quite easy. So to make profit in trading, normally you have two ways to make profit in trading. You either do day trade or swing trade. Day trade, that means you open and close position on the same day. Or swing trade, when you carry over a few days. Or both, it can be both. But then you want to do both, be very clear on what you are doing. The best is you have two separate accounts. One for intraday trading, one for position swing trading. Otherwise, normally, if you do both, I can safely tell you that over time, your intraday trading one, those trading become a losing position one. You keep it overnight, keep it overnight, keep it overnight. So your day trading eventually will become position swing trading. All the losing position accumulate become swing trading. So that's why you must have two separate accounts, or your strategy must be very clearly defined that you are doing day trading or swing trading. Turning point system, that my own system, I have 4 bread and butter strategy for day trading opportunity. So that's why some asked me just now, how do I trade? So I using my own system that I developed to trade every day. And that's very good way of doing it. Normally, I only need 15 minutes for planning for each market. Then I just need to place pending order when the market open. If there's trading opportunity, there are some days when the price or the range is in a gray area, which means not a high winning probability setup. I will just skip, move to the next market. That's why it's quite easy to move on to the next market. You don't feel the pinch that today you don't trade Taiwan, you don't trade China A50, then you got no income. Just move to the next market. You still got Hang Seng, you still got German DAX in the afternoon, you still got US Dow Jones, S&P, NASDAQ. So normally trades will be executed and exit in first 2 hours after market open. So that's for intraday position. After you put in the pending order, then you can walk away already. Unless you want to view the screen and spend time to close the trade, also can. But then you must become very seasoned, experienced trader to do that. Otherwise, if you spend more time to go at the screen one, for new trader, normally cannot make money one. 80% of the trader, if you go to the screen one, cannot make money one, unless you are seasoned and experienced trader. Agree? If you agree, raise up your hand, okay, or type a yes in the chat box. Yes.
For you, take as in the first 2 hours.
Yeah.
So probably you just let it run. Is it your style?
Yeah. Because when you put in a pending order, you normally put in a stop loss or sometimes with a TP. Then you may just look at it maybe 1-2 hours later. Okay, if you didn't hit your TP or stop loss, then you have a choice whether you want to early exit or you just close the trade. So can I share with you 3 steps how to profit from trading, that how I do it? Yes? Yes. Raise your hand. Okay. The rest not interested. Can I have all interested? Then I can proceed. All raise your hand. Okay. I only have very three simple steps to make profit from trading. That's only my own personal view, okay, my own personal style. Step one, which I do on every market, I will identify whether the market trend is a trend continuation or reversal. It means sideways consolidation. Or step two, I will do it, I identify where are the key level support and resistance. So those areas I call turning points. And step three, then I'll just put in pending order. So there's market execution. So let's go one at a time. Step one, identify market trend. So you only need very short, maybe like 5 minutes, you can identify the market trend already if you follow my style. So market only move in two directions. Okay, momentum break up. Okay, either momentum break up or momentum break down. So there are only two directions, either continue up or continue down, or mean reversal. I call it a sideways consolidation. So whatever market you trade, whether stock, forex, you only have two directions, breakout or mean reversal. Agree? If you don't agree, you observe. Tomorrow you check the market. Sure one. Later I'll show you some chart. Yes.
Something called market price manipulation.
Never mind. That one, we leave it aside first.
Advanced, advanced. Advanced.
Okay, come to my class. Okay, identify market trend. Let's say we look at this chart. Okay, now we are at the last bar already. Now we are at the last bar, which is on the last down red candle there. Okay, here. I think you can't see. Hey, laser pointer. Leh.
It is one index.
Okay, we just look at generic. Whatever index you are trading, whatever forex instrument you are trading, including the stock, okay? Let's look at it in a broad direction, okay? We don't care what kind of thing, because the price only move like that, okay? Whether it's a DBS bank, okay, whether it's a Singtel share, okay, whether it's a S&P index, whether it's Dow Jones index, whether it's Hang Seng index, okay, you always have an up and down, up and down. Okay. Assuming we are doing this on a daily chart, every bar is 1 day. Okay. So right now we are at the end of this down candle here. This is yesterday. So today, when the market want to open, okay, then I will always do this analysis. I will always check. Okay. To go long, is it a trend following? Is it a downtrend? To go short, okay, because this will be a mean reversal. Then what's the conclusion here? Next. So we look for a turning point, and then normally you can use few ways to do it. One way you use pattern, okay? You draw a channel, okay, you draw a flat, or you draw a double top, double bottom, this kind of patterns. Or you use some indicator. You can use moving average, okay, parabolic, Bollinger Band, Ichimoku, Fibonacci, Fibonacci ratio, pivot point, super trend, the average true length, etc. Many indicators. So let me just give you one thinker. If you are a momentum breakup trader, that means you want to trade momentum. So you want to trade momentum, okay? Then I have one indicator called moving average using 200, okay, 200 days moving average to help you to decide whether it's an uptrend or downtrend. Because momentum indicator, you only want to know it's uptrend, then you continue to buy. If it's downtrend, then you continue to sell. So if you look at the yellow line here, okay, the yellow line is the 200-day moving average. So potential to go long if the price stay above 200. Okay, that means if the price is above 200 MA, then is a long indication. If the price is below 200 MA, then is a short indication. So if you look at it, those areas I circle it, when the price at the turning point there, okay, that is the best entry level. That means if the price bounce up from there, then the price is going up. So if the price is below, then the price is coming down. So if it's a mean reversal, that means if you are not doing the momentum breakout trader, you are doing a mean reversal. That means you want to always look out for a reversal pattern in a range. Then you use Bollinger Band. So if the price touch the upper band, then you will take the assumption that it is coming down. If the price touch the lower band and turn up, then you will assume that the price is reversing up. So this is called trading in the range. We call it a mean reversal. So when you have many indicators, then you will get carried away with the latest new indicator or strategy. So can you trade without indicator? Yes, there are a few ways, which what I am doing. A few other methods to trade without indicator. You use like a currency correlation, or intermarket correlation, or seasonal pattern, or COT commitment of traders, or buy and sell sentiment, open interest, or you call a CLSA, feng shui indicator. So today's due to the time constraint, and I only touch base on one, just give you one example, like currency correlation, how to trade without indicator. So how do I trade without indicator is I look at the correlation. I trade German index, then I look at the euro dollar. Okay. So the one on top is the German index. The chart below is the euro dollar. So what I'm looking at is if the euro dollar is coming down, okay, then I will short the German index. And if the euro dollar is going up, then I will long the German index. So in this case, I have no indicator. Okay, I purely using the currency correlation, which means I purely looking at the other type of currency that is very highly correlated with this particular index. So one more example, like Australia ASX versus the Aussie dollar. So same thing, I look at Aussie dollar. If Aussie dollar is moving up, then I will long the ASX index. If Aussie dollar coming down, then I will short the ASX index. So come back to what we haven't finished. Step one, identify market trend. So now we have the next day, which is the gap down green candle. So the next question is, are we going on an uptrend, or are we going on a downtrend, or are we on a sideways? How many think is uptrend? Can you raise your hand? How many think is downtrend? How many think is sideways? Okay, one more time. Okay, those in the webinar one, type in the question. Uptrend, downtrend, or sideways? Everyone try to vote. Uptrend. Raise your hand. Downtrend. Okay, more on downtrend. Sideways. Okay, those who not sure one, sideways. Okay. Not sure, you assume sideways because you cannot assume as up and down. So I give you a very strong way of doing it. You are not sure, assume it's sideways. Not sure, sideways. Okay, you want to trade the market, not sure, sideways. Okay. Okay. One way I can tell you is you drew a trend line. Okay. If the price here, okay, already broke the trend line, then you can assume it's downtrend if you are using trend line. Okay. Or you use another one called Heikin-Ashi candle. We show you very clear it's a big down red candle. So then it's a downtrend. So step two, now we come to step two already. After you identify market is uptrend, downtrend, or sideways, then you identify where are the turning point. Turning point basically is we looking at the key level of support and resistance. So Again, the market come to here now. We are at the last candle here, which is a green candle. Okay. Then how do we identify the turning point? You look at the chart to the left side. Okay, to the left side. So from the left side here, you look at all the one that you circle, the highest level from the price that the last candle, last green candle, the most recent high and the most recent low. Laser pointer? Wah, ni jialat. Okay. So you look at it from the circle one, the most recent one. Okay. Then you identify, okay. So the most recent high you indicate is R1. That means you identify two levels of resistance and two levels of support. So from there, R1, R2, and S1, S2. So after you identify already, always identify two levels of support and two levels of resistance if you are doing sideways trading. Then come to step 3 already. Wow, execution already, getting more excited already. So you try to avoid market execution and try to do pending order. It is free to place pending order. And pending order, you only have normally 4 types. Sell limit, okay, buy limit, sell stop, and buy stop. How many are IG client here? Can I assume all are IG client? Do you all have IG account? Raise a hand. The rest both. Cannot be leh. I thought all must be IG client to attend this seminar. Oh, not necessary. Okay. Good news for you is if you are not an IG client, you can open IG account. I think there are some bonus for you. Okay. If you log in the IG platform, okay, and then you will see the chart, something like that. You will place a pending order. If you place an immediate market execution, normally default, you will go to the deal setup there. Okay. So if you do a buy and then bottom there, place order, place deal, this will be market execution. You buy at the market price. Then how do you do pending order? So try not to buy at market price because as I mentioned, you identify R1, R2, S1, S2. Okay. So you do a buy limit. Okay. Buy limit means that you want to buy at the lowest price at the support. Correct? So you place the order and you click order tab there instead of the deal. Okay. Then once you put in the price is lower than the market, you notice the one below there in green, it becomes place limit order. Okay. So this is a buy limit. Then buy stop, also a buy order, but you put the price higher than the market price. Okay. So you notice that when I put the price higher than the market price, bottom here on the green one, it automatically show buy stop instead of buy limit. So for stock investor, it's quite difficult to make money in trading because you don't understand why I want to buy at a higher price. I always buy limit ma. I only want to buy at a lower price. This is for stock trading because you are investment. So you buy at a lower price, hope the price appreciate. But for trading, 50% of the time you want to buy breakup because you only wait until the price move, then you get in, follow the trend to move up. So that's why there's a buy stop to buy 50 to buy higher than the market price. You do a breakup. That's why investment, not buy stop. No, it's not a limit. Yeah, buy higher than the market price. Okay. So same thing like the sell order. Okay, if you do an immediate market execution, you move the cursor to the deal there on top there. Okay, and then immediately you click place deal on the sell tab. this will sell at the market price. However, you do a sell limit, you only want to sell at a higher price. So this is called a sell limit. You notice that if I put the price higher and I go to the deal, I go to the order tab there, then bottom here become place limit order. So this is a sell limit. I want to sell at a higher price. However, there's a thing called sell stop. I sell at the lower than the market price. You notice here, I put a value here lower than the market price. Then I'm executing a sell stop order. Again, if you're a stock holder, why I want to sell my stock lower? Now DBA is $50. Why I want to sell at $40? Because I think if DBS broke $40, the price is coming down to 30, coming down to 20, coming down to 10. The market is in a serious crash. So that's why I put a sell stop to sell at the lower than the market price. So this is called the breakout strategy. Okay, so combine the two. Step one, we identify uptrend or downtrend, okay, or sideways. Okay, if it's uptrend, we do long, which means buy, or long and long on dip. We only do the buy order. If it's downtrend, we do short and short on bounce. We only do the sell. If it's sideways, okay, if you are swing trading, you stay out because sideways no point. You only want to do breakout. Swing trader don't go in at the consolidation phase. Day trading, you do what the stock investor do. You buy low, sell high. So stock investor, this one you will make profit in the sideways market because you buy low, sell high. Because in the sideways market consolidation. So come back to what we are doing here. So assuming it's a sideways, then you place sell limit at R1, sell limit at R2. And then you put buy limit at S1, buy limit at S2. Which means every day you do 4 pending order if you are sideways market. Okay? So you sell level 1, sell level 2, and sell buy limit 1, buy limit 2. You only put 4 order, 2 buy order and 2 sell order. All are limit order. So if it's uptrend, okay, you don't do sell anymore. You only put in buy order. Buy limit 1 at the support 1, buy limit 2 at the support 2. Then 50% of the trader fail because, as I mentioned, you only learn 50% of the pending order. So you only do buy limit and sell limit, which is only the first 50%. 50% of traders don't know how to put buy stop and sell stop one. But this is the most important part in trading. So again, we come back to the same scenario. If we identify is an uptrend, you buy only. So you buy limit and also buy stop. Okay. So you put 2 buy limit as support 1, 2, and 1 limit as support 2. Then you put 2 buy stop. 1 buy stop at resistance 1 above. Second buy stop at resistance 2 above. Which means that if the market is going up, then your buy stop will trigger. If the market is coming down, then your buy limit will trigger. And you only do buy order. Yes.
You buy limit S1. What is your stop loss for that one?
We will do a 1-to-1 risk reward ratio first. Okay.
1-to-1.
Yeah. Which means that your profit is $100, then your risk will take it as stop loss at 100.
Oh.
Yeah. So if it's a downtrend, you do the sell limit and the sell stop only. So downtrend, you start with sell limit. Then you also include the sell stop below S1 and below S2. At this point of time, any question? I see some star around this room now. Okay, quite clear. Okay. Fine tuning, if you want to fine tune, okay, then you wait for conservative approach. If you look at it, when you are buying at price level 1, A is actually same as D. You buy at B, actually same as C. So what's the difference? So we look at the chart is here. So the difference is when you buy at A and B, you are actually against the market trend because the market is coming down. But you buy, you think it's lower. But then while I call it conservative approach, I wait for a U-turn. So when I buy at C and D, actually I do a buy stop execution. But then I'm following the trend. So right now, you can see that why I say 50% of traders fail, because they only execute buy limit A and B. But then 50% of the trader that actually making money is the one doing the buy stop C and D. So this is a very important part of psychology trading. So same thing as a sell limit, okay, conservative rule. And fine tuning, you can have multiple profit account, multiple profit target instead of one single profit target. Then you use trailing stop to protect your profit. And first position, first profit target reach, you can take 50% of the position. And you can do no preset profit target, but via trailing stop after you trade for a long time, okay? This will be actually making you more money. Okay. Try only trailing stop without preset profit target. Understand this part? Very important. That's why it's in yellow color highlighted. If you want to trade consistent profit. Okay, position sizing. Then you can also do this way. If you're uptrend, then you buy double. If you're downtrend, then you sell double. Okay, how to start trading? So normally to start trading, okay, quite easy. You can read trading book, learn yourself. Now a lot of free online resources. And open broker trading account. Now got demo account. Or you do micro lot size. I say one trade $1, that kind. Okay, you start with at least, my suggestion if you're new or you're testing a new strategy, at least 100 trade sample or 3 months before you increase the lot size, because it jump into a live trading pool and scale up. And sign up for farm mentorship program with proper guidance if you're new. Okay, some trading community and learn some strategy together to apply daily. Trading psychology, okay, you have to know yourself whether you are investor long-term or short-term position trading or swing trading. You are able to spend more time, then you do day trading. You are unable to spend more time in trading, then you do swing trading. Just buy and hold for a few days. Then scalper, you can have 5 to 10 trades a day or 5 to 10 pips or points per trade, 10 to 50 trades per day. Then your time frame very short, you can look at M1 between 1 minute chart, M5 or M15. If you're a day trader, which means you close the position by end of day, normally you have 1 to 10 trade, you use M15, 30 or H1. Then swing trader, you carry overnight, then you have to use daily charts, H1, H4 and D1. Position trader, okay, few weeks to few months. Okay, normally you use higher time frame chart. Okay, D1 daily chart or weekly or monthly chart. You know, in trading, I had this magic coin. How many of you have bought this one? The magic coin from Lee Kuan Yew one. Anyone? Wow, you don't support Lee Kuan Yew. Huh? Alright, okay, one. I have this coin that help you to make money. And this coin have two sides. Always you have a coin, always have two sides. Every day I use this coin to make money. You all didn't buy, wow, wasted. Quickly go and buy now. This one I bought $10, I can sell it $50.
No lah.
Allah, waste. Okay, because you make money, you make one trade can already. Okay, I tell you how I make money to this coin. Wow, sibei sui. Okay, when you flip ahead, I buy. Okay, I flip. You hit, then I will buy. If it's tail, I sell. But I got 50% winning rate, you know. Wow, boho, man. That's why when trading, if you don't have a proper strategy, it's like tossing a coin. You can only have 50% winning rate. And no strategy is 100% profitable all the time. Okay, any strategy, if your win rate above 55% or your expectancy ratio is more than 1, we just now somebody asked me what is a stop loss. Okay, we are assuming a very standard 1-to-1 risk reward, which means that you risk $1, you make $1. 80% of the trader cannot make consistent profit over long term. So that's a key issue. Your strategy must have at least more than 55% win rate, which means that you trade 100 times, you win 55 times. Minimum. Then your strategy is working fine. Okay.
Yours is one to one.
You're using 1-to-1. Later we touch about the other one, 1-to-2, 1-to-3. Okay. So market is quite random. And if you have winning strategy, 60% of the win rate with 1-to-1 risk reward. Okay, 1-to-1 risk reward means that you risk $100, you get $1 reward. You risk $100, you get $100 reward.
It means zero leverage.
Yeah, something like that. Okay. So can I ask any rich guy here, you got $200 cash, can take out a wallet? You got $200 cash. Wow, all then rich. More than 200, is it? $200? $200? $200?
No, cashless.
And you are willing to win $200 or lose $200. I give you a winning strategy, 60% win rate. Yes? Anyone?
So 40% lose rate.
Yeah. So if you follow me doing it for the next 10 minutes, with the 60% win rate, which means that you will make 20%. 60 minus 40 So quite okay, which means that if you take out $100, you are going to make $20. Anyone?
Actually, it's how long? 10 times.
10 times.
Wow.
10 times 60% rate.
Here, within 10 minutes. Okay, anyone? Let me see, you still got 10 minutes. We can try. Okay, can I invite someone here? Hey, 来了. You. Give me support. Come. Since you got no money, I don't need to you. I don't need to you. This here, pay interest. Okay. Count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Got 10 or not? Count.
How much?
Okay, market is random. Market is random. So this is purely hypothesis and what is normally going to happen in the market. Face this way, you can see the chart. Okay. So let's say first week you bet, every time you bet it's $10. First trade you win or lost. Trade number 1. Win. They put $10 first. Come and win. Okay. Yep. So first trade you win, which means that you will have $10. You win 10, 1 to 1. You bet $10, you make 10. Okay. Second trade, win or loss, make $10. Win or loss, loss. Okay, so I keep 10. So third trade, you win or loss? Win. So you take back 10. Fourth trade, you win or loss? Fifth trade, you make. You will bang me. Okay. Sixth trade, win or loss? 7, 8, 9. Okay, count. How many you have now total?
7.
Huh? 11, 10. Still got one more.
Oh, still one more.
Win or lose?
Win.
Okay.
Okay.
10.
Okay, count.
$120.
120. So he made 20%, right? 20, right? That's why I say you might just you go there. That's why I asked you to come. You don't want to come. We'll give you $20 or so, 20% return. Okay, next second week, must continue, Because we say 10 minutes, I haven't reached 10 minutes, right? Okay, this one only 1 minute. Okay, second trade,
Wow.
win or loss?
Oh, so
Win.
Raymond,
Okay.
you should play this.
Second
by
trade,
copying
win
the
or loss?
slide lah, don't follow the slide.
Third, win or loss? Fourth, win or loss? Fifth, win or loss? Sixth, win or loss?
Too long.
Okay,
Oh, Raymond, can you toss the coin and repeat?
where is it? When your strategy working very fine, you win consecutive. Every trade you bet, you make money. What do you do on the seventh trade? Huh? Say louder.
Yeah, increase.
Increase the lot size. Okay? If you are human, you will increase the lot size because the strategy works so well. If you are not human, then do normal.
Yeah.
Just $10 back. So normal people, you increase the lot size, increase the capital. Okay? But then on the 7th trade, on the 8th trade, on the 9th trade, on the 10th trade. Okay, count. Now,
$10. Make $10. $110.
you count salah leh. You do 20.
Yeah, $110.
Okay. Supposed to be 20 lah. One way lost in between. I don't know why. Okay, but most likely, as we explained, most likely actually you will lose 20% because we are human. On the 7th trade, you will increase the capital. So you will put 20 instead of 10. On the 8th, you also think you will still be winning. On the 9th, you also put 20 because you increase already. So now your capital size, your appetite very big already. You put 20, 20, 20. You won't reduce to 10 already. So when you do that, net result is you're going to lose 20. So this is human behavior. If your strategy is working very well, you also lost money. Okay, one more, continue. You still have answer, Okay, let's continue. Okay. Okay, big three. First trade lose money. Second, third, fourth. Okay, you consecutively lost 4 times. Why would you lose on the 5th trade? This one double. This one? Behind. What do you do? Yeah, stop trading. If you are human, okay. But then you will continue. This guy is not human, so he will continue. So on the 5th trade you make. On the 6th trade you make. On the 7th trade you make. On the 8th trade you make. On the 9th trade you make. On the 10th trade you make. So what's your net result? So you'll still be making 20. Yeah. So that's why even the strategy didn't work well at the beginning, but your system is very consistent. So you're always at 20% return. You know over a long term. Okay. So you will still make 20%. But then a normal human, most likely you'll lose 10% instead of consistently making 20. Why? Because the first 4 trade you lose money already, ma. So on the 5th trade, that's how already said, you stop trading, right? Yeah, this is human. This is human. This guy is inhuman. Okay. So human, you will stop trading. Observe first, ma. On the 6th trade, you also observe first, ma. 不相信嘛. On the 7th trade, maybe 放一点点. Okay. This time instead of 10, you put 5. Okay. On the 8th trade, 好像可以嘞. Okay. You put another 5. On the 9th trade, convince it's 5 actually can you put in 10 again. So on the 10th trade, you put in 10. Then the net result is you still lose 10. This is human. Human will do this way. This guy inhuman. Okay. So let's say continue again. Okay. First trade you lose. Second trade you lose. Third trade you lose. Fourth trade you lose. Then what do you do? No, last week you already stopped in this way. So you learn already. You smart already. Last week you lost 4 trade. You notice that actually system SIA. The green continue one. This time you learn from last week. You will no double one. This guy is very super inhuman. You will continue. Alright. You know already, you continue, you will make back 20%. Correct? So continue.
No.
Continue, Okay. Then continue.
Serious?
6 of money. Yeah, continue already.
This one,
Okay. 6, 7, 8. Then you left.
40.
No, you see it.
Yeah.
So on the 9 and 10 trade, what do you do? All in correct. Continue break down one mala side. So then 9 trade also lost money. So what happened now? Your account burst already. Capital too small. 那师傅骗我的，搞到中介 system is 20% winning. Then now lose. Then what do you do now? As a human, what do you do? Lady, this guy very human, this lady. What do you do?
Permanently stop trading.
What?
Quite true.
This is really human. This is really human. Okay. Then come to week 5. Permanently stop trading. Okay, this one some more. 有没有 not so inhuman or half human?
Jump.
Jump down. $100 you want to jump down from 21st floor. What do you do? Top up. Okay, this guy top up. Okay, I loan you first. Go and loan money, okay. Loan from your father, mother, brother, sister, your daughter, son. Okay. No which means that actually if you have $1,000, you put all in. Okay, you put $100 for first account to try first. You still have $900 ma. Don't put all in the trading. Put a bit first. Put maybe 10% or 1% first. Okay, then you still got money one ma. This guy only poor $100 want to jump down. Cannot already lah. Okay, then continue. What do you do? Wow, this week then shiok. 1, 2 also make. 3 also make. 4 also make. 5 also make. 6 also make. 7 also make. 8 also make. 9 also make. 10 also make. Whole sale this week. This guy one make already. This guy one. What do you do? Stop trading. So okay. Then most likely okay, this lady is correct. Most likely give up. Wow. after consecutively losing 10 trade, you still don't want to give up. Very inhuman. So this is actually what will happen. You will be giving up for 10 trade because you not confident already. Your whatever system confidence is shaken already. Then you come to maybe on the 4th to 7th, 4th week you lose all. 5th week you make back all. Then you come to 6th and 7th, market come to become behavior properly or behaving properly. You make back your 20%, 20%. So over the 4th week, over week 4, 5, 6, 7, you will still be making consistently $40, which means that over $200 capital because this time you top up. So you will be still making 20%. Thank you.
Yeah, thanks.
Because you loan one.
Yeah.
If you real money, I give it to you. Okay. So that's why market is random. So if you see that this is only a hypothesis, but what happened, this is very realistically. Most of the time it happened this way. So that's why you will have, if your system is working very well, okay, if you have tested for 100 sample, you know that over time you'll be making money consistently. Okay, so this is what they're supposed to be. But then in reality, because we are human, most likely this will be what happened. Okay, as we mentioned, after you consecutively losing all the 10 trade in week 4, then 5, 6, 7, you give up already, you don't have confidence in this system, you don't have confidence in this strategy, you don't have confidence in this master, you don't have confidence in this instructor in this school. So that is the reason why most traders cannot make consistent profit over a long time, because the system is not developed by you. You have not tested fully the system over a period of a long time. So you don't have a confidence and you are unable to tilt the system into the way that you are comfortable to yourself, to your instrument, to your time frame. So this is a reason that why most of the traders, after a long period of time, most likely this is what's going to happen. You notice you're going to lose all the way of your capital, including your initial winning normal market behavior, because you will not follow up after a series of straight drawdown. So market is different. Market is random. That's why different experience, you will have a different mindset. We always controlled by two emotions. Fear, because after a series of losing, or greed. Even you are winning, you also cannot make money because greed, you increase your lot size. So that's why all learning the same strategy, but then you'll get different result over long term. So this is a behavior I noticed for all my students, especially those new students. That's why a lot of people ask me, why most of it are not making money. So this is a reason, because they do not have patience. Nowadays, especially young people, very impatient, especially all of us now, very efficient. Everything we want fast. We must see the result fast. We must trade fast, make money fast. That's why you will win. Very good. Increase the lot size, make more money, make more capital. That's why you lose. If you lose, stop trading. This one no good already. Change strategy. So that is the reason over long term cannot make. Then just now one gentleman asked me, what is a risk-reward ratio? So we are talking about strategy A, RR, risk-reward 1 to 1, which means that you risk $1, your reward is $1. And you have strategy B, RR, let's say your risk is $1, but your reward is 2. Strategy C, RR 1 to 3. You risk $1, your return is 3. So which strategy is better, A, B, or C? Those who say A, B, C. Oh, go for C lah. Right. This risk $1. Why you go for one? This one got two. This one got three. Go for strategy number C. Correct. I tell you, there's a risk reward. Risk $1, you get return 1 million one. Toto lah. All go for Toto lah. Correct. Risk reward is 1 to a million. Then why you still sitting here for trading? The reason is very simple. When you set your risk reward higher, your winning rate is lower. Okay. This is sure. Market is very fair one. It's statistically proven. Okay, trading is just a mathematical game and a probability game. If you set your risk reward 1 to 1, and your strategy is working fine, like what I mentioned, 60% win rate, 1 to 1. So this is a good strategy already. However, applying the same strategy, I change my profit target to 2 instead of 1. Then my win rate will reduce down to 40%. If I change my strategy to 1 to 3, my profit is 3, I risk is 1, then my win rate will reduce down to 30%. So that's the reason why Toto, many of you don't want to do. How many of you go and buy Toto? Wow, so smart, all of you. Because the risk reward is 1 to a million. So your win rate is 0.000001%. That's why all of you so smart don't want to go for it, because your win rate is very, very low. Only 1 out of a million will get it. Okay, so this is what you call a win rate ratio. Because strategy A, when you win is $1, so you win rate 6 times, okay, you get $600. When you lose, you lost $100 each. So you lost 400. Whereas if you set to strategy B, your win rate 40%, that means you only win 4 times out of 10. But every time you win is $200. Okay? Strategy C, your win rate is 30%. You only get 3 win out of 10, but every time you win is $300. So you notice that even with this win rate, I still get $200 profit. Whether I using strategy A, B, or C. Okay, this is assuming the strategy is working in a very normal market condition. So you have to tell yourself what kind of win reward, risk reward ratio you want to use. Okay, if you want to use normal 1 to 1 risk reward, okay, then your strategy is working very well, 60% win rate, you'll get 6 times out of 10 winning ratio. But then you are the kind that, hey, I don't want to trade so long. I want, every time I win, I want to win more. Okay, I want to win 2 times or 3 times. Then your win rate is lower. So we don't talk about Toto, 1 risk million reward. How about the other type? If we set it to strategy D, RR is 2 to 1. Means that you risk $2, but you only make $1. Does it make sense? Will you go for this kind of strategy? This kind of strategy, I tell you, also can make money one. Okay, I'll show you how. Okay, because this kind of strategy, your win rate very high. Your win rate very high. Okay, let's say this strategy, if I change it to 2 to 1, okay, my win rate will be 80%. Okay, which means that out of 10 trades, I will win 8 times. So every time I win is $100. But if I lose, okay, I'm going to lose $200. So my net return, I still get positive return. I show you, choose a risk reward ratio that suits your own profile, because some of you like to win big, okay, lose small. Okay, then you choose your risk reward 1 to 3, that kind. But then your win rate very low. Some of you like this kind. Every time win. Never mind, I win small, it's okay. I make myself happy. Every day, 8 days I'm happy. I'll see 2 days, it's okay. Okay, I lose big, but then I'm happy all the time. Okay, so that's why you have to choose your own personality. So this is very important in trading psychology. If you don't understand this part, you cannot make money. So IG platform have this thing called trade analytic. How many have observed that this part or used this part before? Okay, so if you use this, what is your win reward ratio? Your profitable ratio? Have you trade? It's okay. Have you trade? Have you checked? You haven't checked. That means you know of it, but you haven't checked of it. Okay, so this is very good to check. You go to your IG platform there's actually, before you open platform, right below there's analyze trade. Okay, if you're lazy, you don't do trade journal, this one can help you in some aspect. Okay, you click the analyze trade there. Below there, you can see that actually this is the one that I mentioned, that kind. Your risk reward, your risk is 1.78, but your reward is 1. Which means every time you lost $1.78, then you only make $1 profit. But then your win rate, as I mentioned, this kind, your win rate very high one. Okay? So this one, my win rate is 75%. Still make money or not? Still can make money. Okay? So you look at it, how you analyze trade. You must have a return rate above 1, okay? Then your strategy is working fine. So this strategy is 1.18 above 1, right? So it's working fine. And then average profit is this dollar, average loss is this dollar, but then still making money because win rate 75%. So to close it, when you have a start to a new trading strategy, do not trust the published result. You also have to check it, and always do back test first. Start with micro account or micro lot size. Forward test for at least 3 months or 100 trade sample, and have a few different accounts instead of just one single account, preferably with hatching enabled, which means that your account can do buy and sell at the same time. And different broker have different spread for each instrument. That's why you choose a broker with the right spread. Different broker have different to trade different instrument, different account to trade different strategy. So how do you do multiple account? This one I show you how I make money. If you are keen, okay, you split your trading account into multiple account. I mean, just now I mentioned, if you had 10,000, you don't put 10,000 into one single account. So if you're conservative, you put 1,000 into 10 account. Okay, and each time you can afford to risk 100%. But then you actually only trade 10% of each capital.
But same strategy.
Same strategy. No, you can have a different strategy, but you can apply same. Then how you do recovery? Okay, once your first account bursts, you continue with the second account. That means your first account, you risk $1,000, which is 100% of that account. But then you still have 90% of your capital you haven't put in yet. So this is how you do recovery. Okay, if you are the kind of very new, don't put all your trading capital in first. Okay, if you have 10,000 prepared to trade, you put 10% first on one account. If this account bursts, you put in another 10%. So that's what I mean, that if you have one straight or losing, your account bursts already, but then you still have 90% of the capital. That's why you would not be scared. So if you are aggressive, like me, okay? So this is how I do. I show it to you. First account, you put 1,000. If you lost already, second account, this time you put 2,000. Third account, third time, you put 3,000. Fourth time, you do 4,000. So what does this mean? You mean first account, you still trade exponent, but then every time you put is $100 or $10, $10. You can afford 10 times. Second time, you put 2K, which means that your account double. This time you put 2 lots instead of 1 lot. Still burst, but your strategy is working very well. So third time is $3,000. So this time you're going to put 3 lots. Because this is only haven't reached your 100% of capital. Remember, I say your capital is 10,000. Okay, you split it. Either conservative, you do 10 account, $1,000 each, or you do this one, very aggressive one. Okay, but that is very profitable. When you are more aggressive, it's more profitable. Trading, you have to be more aggressive. First account, you trade as per normal, 1,000. Burst already, this time you put double, 2,000. But remember, your total capital, trading capital is 10,000. Okay, then you can do this way. So you put 2,000. But then this time double lot size. Still burst. Third time, 3,000. Okay. Still burst. Fourth time, 4,000. This one is the end already, almost show hand already. But then this, when you do this way, you have to make sure that you understand your strategy and you're proven it's working very well. And you're confident that over long term, you can make money. Which means that you already have tried 100 sample. Then you do it this way. Otherwise, don't do it. First account burst, this strategy cannot work already. Okay, so if you're keen to know more, you can keep my contact, WhatsApp me, or Telegram me, or email me, or go to my website. Okay, I will have an upcoming workshop again in March. For those who keen to know more detail, can WhatsApp me. Okay, so thank you everyone for attending. We close the session now. Wishing all a profitable trading. Voila! Okay, thank you.